Hi, my name's Jordan Wilson. I'm here today with 𝐁 𝐁 to look at some of our personal experiences and the lessons that we have learned in becoming chartered financial analysts. This session will be a follow-up to our formal presentation entitled CFAs, Chartered Financial Analyst, but also Careers for All. 𝐁 𝐁 is a senior wealth advisor and portfolio manager at Scotia Wealth Management. She provides guidance and solutions to high net worth individuals, corporations, and foundations in meeting their wealth management goals. Robin obtained her Bachelor of Commerce degree in 2010 from the University of Saskatchewan, and she obtained her CFA charter in 2017. Robin enjoys volunteering her time with several charities and nonprofit organizations, as well as enjoying time with her husband Chris and her new son Keanu. I'll turn it over to Robin for a brief discussion of her personal journey.
Awesome. Thanks, Jordan. So growing up, I always loved math. I was strong in the subject and was always interested in learning more in that area. In high school, I enjoyed science and math. I was strong in those subjects, but ultimately decided to go down the business route as I enjoyed math and financial planning. I was aware there was a bit more flexibility going down the business route rather than the medical field, which was intriguing as a student who didn't really know what she wanted to do at the age of 16. In university, I took all the introductory courses required and got my feet wet in marketing, management, accounting, and finance. I really started learning that I enjoyed my finance classes, and at the end of year 2, I chose finance as my major. In my fourth year, I did the co-op program, which provided me with some work experience relevant to the finance field. It was credit lending at Wells Fargo Financial to individuals with poor credit ratings. They couldn't get traditional financing, and interest rates ranged from 19 to 39% when prime was around 4%. This job allowed me to really understand that I enjoyed interacting with clients on a day-to-day basis. However, I didn't want to be on the side where clients were needing money rather than looking to invest their money. I graduated from the university a year later and got a job at Scotia McLeod, where I still reside. I started in an administrative role with my conversation when I was hired that I wanted to eventually be in a financial advisor role. I went on to complete my CSC and CPH. These were requirements as being part of the 𝐼ROC industry. Ultimately, these courses allow you to take trade instructions from clients, but if you want to give advice, there was another course called the Wealth Management Essential course, and I also went on to complete this. These courses were all done within the first 12 months of my career, and then I went on to figure out what else I could do to increase my knowledge base, reputation, and ultimately set up the remainder of my career for success. I looked at doing the CFP, which is a financial planning designation, but ultimately decided on the CFA route. It just was more suitable for my interests and ultimately allowed me to go down the path that I wanted to be. There isn't many CFA holders in the wealth management industry, as it's typically a designation that individuals believe isn't required. I think this is changing. I received my CFA designation in 2017, and it ultimately improved my knowledge as I had hoped, my confidence and ability to work with high net worth clients that require top-notch financial advice on a daily basis. It also improved my credibility with fellow finance industry professionals, as once someone learns you have the designation, they understand the hard work and tough times that you were required to obtain it. It is very respected and sought after. Today, I spent most of my day meeting with individual clients who require financial advice to manage their personal finances, as well as businesses that they run. I also manage a portfolio of assets which we recommend to our clients that they invest in. Throughout the various roles I held, I believe they were necessary to get me where I am today rather than waste time. The various roles built my skill set so I would succeed in the next role. With that being said, I still continue to learn and improve every day, as the finance industry is always changing. Thanks for listening. I would like to introduce Jordan Wilson, who will discuss his personal journey. Jordan joined the CFA Society Board in 2018 and is currently Vice President. Jordan began his professional career in public accounting before moving into senior finance roles in Calgary's oil sector. Seeking a lifestyle change, He ended up in the Cayman Islands, the Bahamas, and Switzerland, working for the world's largest wealth manager, UBS. In 2007, Jordan returned to Canada and currently runs a fiduciary fee-only wealth management and business advisory firm in Saskatoon. Now, Jordan will let you know about his personal journey.
Thank you, Robin. Just going to go through a very quick overview of my past. I actually started out in public accounting with Pricewaterhouse in Calgary. There I obtained what was then known as Chartered Accountant's designation. Today it would be called the Chartered Professional Accountant. After working at Pricewaterhouse, I moved into the oil patch, first as a controller with an oil services company, and then as treasurer and VP finance with a junior oil company that we started. So I've got some experience in oil services, as well as taking a company public on the Alberta Stock Exchange. Oil prices were even worse than they are today, so we were looking for a lifestyle change, and the opportunity came up to move to the Cayman Islands. I joined UBS at the time, and still currently the world's largest private wealth manager, in their fiduciary business, so the trust company in Cayman. I worked in Cayman, I worked in the Bahamas, and then I was transferred to Zurich, Switzerland. While in Cayman, I finished my Chartered Financial Analyst designation, and I continued to use that in the fiduciary business while in Zurich. In Zurich, I did a variety of things: risk management. I did lots of mergers and acquisitions. And for a 3-year period, I headed their global trust operations. That included trust companies in the Jersey and the Channel Islands, in Singapore, in Cayman, the Bahamas, and Swiss operations. So I spent a lot of time working with people in all parts of the world, hiring people from all parts of the world, and dealing with different cultures. So that's one of the things I bring to the table in the discussion today. In 2007, I decided to return to Canada, and I set up a small boutique fee-only fiduciary wealth management firm. And that's what I do today. I do wealth management for individuals and some business advisory for owner-managed enterprises. While back in Canada, I also added a certified financial planner designation because, as Robin pointed out, that is popular with a lot of people, and it's a well-known designation if you want to get into financial planning. So that would be my sort of quick story of my life, and hopefully we can flesh things out as we discuss some of the issues going forward. Okay, in our formal presentation, one of the issues that we discussed was that today's CFA is usually much more than just a finance major. Now, we're fortunate in that Robin actually is a finance major, and she's done the more traditional path. So we'd like to sort of go through some of the things that she did and some of the experiences she had, whether it be in college or today. And one of the questions that I would ask her is, how does the 3rd or 4th year of finance compare to entering the CFA program for studying, for breadth and depth of knowledge, the need for focus? And how is that actually impacted by trying to work a full-time job, maybe have a family, outside life? Robin?
Absolutely, Jordan. I think this is a question we get asked quite often. You know, university is definitely a necessary thing for many, and even of obtaining the designation, you need to have a degree. But the breadth of the CFA program is no joke. It is a lot of material. It is a lot of attention required. It just is very, very time consuming. Now, the information you're learning through the CFA program is definitely, stuff that is necessary to really succeed in the finance industry. And I think there's just so much information out there that it is important, which I think, makes the CFA program so difficult. It is the breadth of the information. Now, coming out of university, I don't think you can really prepare for the CFA program. If you compare them, they're not apples to apples by any means. They're, yeah, you know, you're going on your own. Most of the time with the CFA program, you're taking your own personal time and having to fit it in between your busy work schedule, your busy family life. Whereas university, that was your focus. So lots of times, you know, in my scenario, I did take a few years before completing the CFA program, but in many times you're starting a new job at that time. So you're needing to develop your skill set at your employment as quickly as possible, which does potentially require you to work longer hours at your job. In my scenario, as I said, I did start the CFA program about 3 years into my employment. However, I was always doing something different at my job, so it was requiring a lot of attention. I was working a lot of overtime, plus studying at the same time. And I think it's definitely something anyone can do if they set their mind to it, but it is a lot of work. So you need to be definitely engaged and prepared to put the time in to pass the CFA program. It's not just going to happen like potentially a university course may have worked. Do you have anything to add, Jordan?
Yeah, I'm going to grill you like a defense attorney. So, I mean, the two points that sort of came out to me from what you were saying, and I do a lot of candidate preparation work with, you know, especially the level ones, the people that are just starting out. And overwhelmingly, what I hear back from them is I failed level 1 because I did not realize how much studying was required, how much breadth and depth of information I had to learn. And so I went into the exam for the first time unprepared. I didn't realize it'd be so much different than university. So that would be the first comment I'd just like to get from you is that I think you would agree with that it is so much different. Just because you're a finance major doesn't mean anything in the real world. Exactly.
Yeah, you're right. Everyone thinks they can just take what they learned in university and go challenge the CFA Level 1 exam, and that's definitely a no-go. You know, the CFA exam is only a set number of questions, but you need to know all of the information in those CFA books, and if you haven't read a section, you're not going to know the answer.
And just to sort of follow that, when you are writing the CFA exams, you're writing one global exam against people, highly motivated people from all over the world. So with less than 50% pass rates against highly motivated people around the world, you've got to step your game up.
You got to bring up your A game, yeah, absolutely.
The other point that you made, which I'm not quite sure I agree with in one sense, is that maybe it's a Saskatchewan thing because Saskatchewan doesn't have a pure investment community to speak of, a stereotypical one. Now, what I've seen internationally is there is a recognition of the importance of their people attaining the CFA designation because it is the #1 finance designation. So a lot of companies will actually have some flexibility with their people to support them. For example, when I left UBS actually created a relationship with the CFA Institute to do in-house training for their candidates. So from what you said, you know, sort of you're doing it on your own, depending on where you are in the world and the company you're with, you may get support. For example, if you work for someone like me that is a CFA, I understand how important having that designation is. So I will give you some flexible time and maybe a little help to get through the program. And maybe in your case, not having a lot of CFAs when you started the program at Scotia, that was the issue. And I just wonder if you have any thoughts on that.
Yeah, you know, you're bang on. You definitely need the support, you know, any little bit of time away. By all means, I had support. You know, I took time off around exam time and was given the ability to really focus. I think, though, with the program being as long as it is, you know, asking for maybe a handout for 4 years or 3 years isn't really going to happen if you're looking to advance your career. So definitely flexibility around the busy time, like leading up to the exam I was given. But I think prior to, it's just hard to really ask for much more if that's the case. But I do agree, if you've been through it, you maybe are going to be a little bit more lenient.
Yeah, and I think that is true. It's now you're in the real world.
Figure it out.
I expect you to do your job, and if you want to get your MBA, you want to get your, whatever,
Right.
Fit it into the work schedule.
That's right. Yeah, you need to definitely have supportive home life. If you're married or have children, I think everyone has to be on the same page.
And the other question I'd probably ask, and you discussed that a bit in your personal journey, but if I want to do the CFA program and I want to wait 3 or 4 years like you did, what would be good courses to take? Canadian Securities Institute offers a lot of courses. Banks in-house offer courses. So what sort of courses might I take that would help me get through the program once I entered?
Yeah, I don't think anything can truly prepare you for the CFA program, but there's lots of industry-related courses that you may have to take anyways to become licensed for the IROC industry, such as the Canadian Securities course, the Conduct Practice Handbook course, the Wealth Management Essential. They're all necessary and definitely increase your knowledge, but I do believe just work experience and just having real-life situations does build up even, the ethics section. That's something that you can study as much as possible, but you're going to look back at some situations you've dealt with personally and understand what's ethical or not. Ultimately, there's certain things that you do in your day-to-day. I'm sure you can relate in the accounting industry with the financial analysis statements, just having hands-on experience. You would have thrived probably in that section going into the exam, whereas someone with zero knowledge, probably they had to study their butt off to get to that point.
So we were going to cover this a little bit later, but let's segue into this question now then. I think one of the eternal questions in entering the CFA program is, do I start the program as soon as possible after I come out of university? So I'm in that study mode still. I'm young. Maybe I've got time. I don't have a wife. I don't have a husband. I don't have kids. Maybe I have a cat, and that's about it. So do I start early, or is it smarter to wait, as you did, 3 or 4 years, or in my case, I'm not sure how long I waited, maybe almost a decade, let's say, before I started the CFA program.
I would like to know your thoughts, Jordan.
That is a tough one. I think there's compelling arguments in both. And fortunately, I've written down a few. I honestly think there's strong arguments for both. And I think a lot of it has to do with your own personality, your own intelligence, your own willpower. I think if you commence immediately after university, there is a clear argument that your brain is still in the study mode. And that's important because it is true, as you advance, your ability to study, to pull all-nighters, to do that sort of stuff does fade. So starting earlier is good in that sense. And even more so as you get into the family and the kids and all that good stuff, the more distractions you have, the less time you want to study. So getting in early. The other thing that people I don't think appreciate, and Robin can comment on this afterwards, is you start going down career paths. You become, a professional accountant, and then you get a job as a controller in the oil industry, and then you segue into VP finance. And all your dreams of going back and doing something else, teaching scuba diving in the Caribbean, or, all these things, it's like, okay, I'm on a path, and I don't want to go back and start fresh. Mm-hmm. So after I got my chartered accountant designation, I was actually going to go to law school and become a tax lawyer. And I went out to UBC, looked at their campus, fantastic. And I realized, do I really want to spend 3 years living in a dorm now that I'm making money? And so, no, I didn't want to sacrifice. So if you start the CFA program early, you're in the program and you're not going to get sidetracked. Whether that's good or bad is debatable. Yeah. So that's sort of the big arguments for starting early. Yeah. The biggest argument to me for waiting is the experience that you develop. And really, there's no substitute for experience, understanding the issues. And I use economics as a key. When I was in college, I took the economics courses, understood about supply and demand and elasticity and all that good stuff. But I never really appreciated it because I never had money or marginal utilities and these sort of things. I never experienced them. When I went through the CFA program 10 years later, all that was, it all makes sense. And so having real world experience helps you, especially in level 3 when half the exam is wealth management and planning. So if I'm 35 years old now and I've got a wife and kid and I've got the insurance and I've got the education registered savings plans and I've done all this myself, when I get a planning question, it's real. If I'm 22, maybe it's not something you can relate to. So there's that advantage. The caveat, though, is I remember level 1, I was in Calgary, and I did a prep course through the University of Calgary. And I remember sitting there, it was every Monday night for 3 hours. And we had a group of guys, I forget if they were from Nesbitt Burns, maybe Scotia, who knows. But they were from one of the banks, they were brokers, and they were doing level 1. And every 5 minutes, no, that's not the way we do it at Nesbitt Burns or wherever. And it's like, hit the friggin' answer key. I don't care. The markers aren't going, well, geez, at Nesbitt Burns, they do it slightly different. We'd better give this guy credit for it. And so at times, your internal policies and procedures and how you do things at your own company may run contrary to best practices or how it's done for the grading. Yeah. So again, in that area, experience can sometimes bite you. Mm-hmm. And so, these guys were idiots because you got to learn how to hit the key. That's how you pass exams.
That's right.
So that's kind of my thoughts is I personally prefer getting a little experience. And I think that trade-off for me, anyways, of getting that experience versus the degradation of my mental capacity to study was warranted. So that was my story.
Yeah, I personally think, as you just said, you've hit all the pros and cons. Ultimately, it's a personal decision at the end of the day, and you need to kind of weigh those pros and cons and figure out what's going to be suitable for your personal journey after all. So, Jordan, you were a CPA, CA financial accountant before becoming a CFA. In your presentation, you showed how heavy the early levels of the CFA program were in respect of quantitative analysis and accounting type topics. Why did you decide to make the shift to finance from accounting? Did having a CPA assist you in becoming a CFA? And what sort of CFA-related technical skills would you recommend for future Saskatchewan-based CFA candidates? That's a full question.
Yeah, I think there's actually 3 questions in there. So, what led me from accounting to finance? That was sort of the first area. I was actually a finance major in university, and I wanted to go that route. That was me. Unfortunately, in that era, your opportunities were go work for like Bank of Montreal up in the Alberta equivalent of L'Orange, in their assistant manager trainee program for 3 or 4 years. You cut your teeth, you paid your dues, and then maybe you got a chance in the Saskatoons, or in my case, Edmonton or Calgary.
Yes.
That really didn't appeal to me a whole lot. Being young, single, and going up 300 miles north wasn't what. And then I'm looking at all my friends who are all accounting, and they're getting wined and dined and taken out and treated like kings, multiple job offers. And I said, okay, maybe accounting's the way to go. Now, that was part of the reality, but the other part of the reality for me was I learned about investing and I studied it when I was young. So even in high school, it was a love of mine. And back in that day, fundamental analysis, Benjamin Graham, Warren Buffett, those were sort of the investing keys. You actually studied companies, looked at their financial statements, looked at their ratio analysis, did your quants, did your quantified and qualitative analysis, and you made investments, value investing. So I knew that if I wanted to get into investing, that I needed to have a strong understanding of financial statements. And so I said, okay, this is just a slight detour to strengthen up my finance skills and my accounting skills. And that's what I did. I ended up actually, and again, personal preference, and this is some advice for people, is I specifically chose at Price Waterhouse, their small business practice. So I dealt with owner-managed enterprises, a lot of junior oil and mining companies, a couple of big ones too, but a lot of different businesses. Some of my friends at Price Waterhouse, they wanted to work on the Amoco's, the Essos, the Shells. And what I see here in Saskatchewan is a lot of these same people that article, especially with Deloitte's, okay, I got on the Nutrien audit. I'm going to work there, 3 years doing the audit, and I'm going to jump ship to Nutrien because I've made my contacts, and that's a great company. Cameco, the same. So it's kind of two divergent ways. People are saying, I want to work corporate finance for a big company. I'll get on the audit for them, make my contacts, jump ship. I wanted to learn as much as I could about a ton of different companies. And I did their taxes, I did their planning, their estate freezes, basically what we would say cradle to grave. We saw everything. And that made it a lot easier when I jumped ship to become a controller in oil services and then on to VP finance. So in my case, having the accounting was a way to improve my investing and finance knowledge. And unbeknownst to me at the time, but clear later, level 1 especially is so heavy on financial reporting, ratio analysis, quantified analysis. And that's kind of why in levels 1 and 2, I had such a definite advantage over other people because I didn't have to spend my time studying accounting. Whereas someone that doesn't have the accounting background, that is heavy. So in my case, that really helped me get through the program, was having that financial accounting background. The caveat today is because they merged the CPAs, the management accountants, the general accountants, and the financial accountants, is you've got to figure out what career path and will a management accounting experience give you that analysis skills. And the answer is probably less so than if you're doing audits and review engagements and tax planning for clients.
That makes a lot of sense. So what sort of technical skills would you suggest a future Saskatchewan-based CFA candidate needs?
Technical skills. Well, I actually, and we've discussed this ad nauseum, I'm a big believer in complementary skills, so I'm not a huge technical guy. And you covered that nicely with all the Canadian Securities or Canadian Securities Institute courses that are offered. There's a ton. I think, and again, it depends on what you want to do. For example, in your business and my business, you learn nothing about tax in the CFA program. Mm-hmm. But literally everything in investing or wealth management is tax driven. So if you want to be technical, and you can call it complementary, you can call it direct, you got to have a base knowledge in accounting. Correct. Or in taxation. And so that doesn't mean you actually do the tax returns for your clients, but you've got to be able to identify even things like the difference between capital gains, dividend tax credits, and all this stuff. So if I see a Apple computer dividend from the US, I don't treat it the same as a eligible Canadian dividend because I want to look at everything on an after-tax basis. Right. So tax is important from a technical side. Anything that helps your investing knowledge. And I'll just sort of foreshadow industry experience, quants, quals. Anyone can crunch numbers. It's how you analyze and assess those results that's the key. And we'll touch on that when we talk on the complementary skills.
Right. So, Jordan, in the formal presentation, you discussed that many CFAs do not work as traditional or stereotypical financial analysts. If someone wants to live and work in Saskatchewan, where there's not really a strong investment industry, what type of career paths might be open to CFAs?
Leave the province. No.
We love Saskatchewan.
One of us does. There's a ratio analysis for you, 50%. I think there's probably three comments I'd like to make on that. I mean, the first is Saskatchewan is not Bay Street in Toronto. It's not Wall Street in New York. It's not even downtown Calgary or Vancouver. So there's not a lot of stereotypical finance positions, investing positions, WestCap, there's a plug for WestCap, PFM Capital. That's sort of more your traditional, but there's not a lot of jobs there. So look farther afoot. And in wealth management, it used to be that they didn't hire CFAs for wealth management positions, in a large part. Now they're recognizing the training and the value that having a CFA designation brings. And at some point, one of the issues we'll discuss is the difference between CFPs, CFAs, and CPAs. And we'll cover that in a bit more detail, but there is a vast difference on the investing skill sets between a CPA or a CFA and a CFP. So there is value as wealth managers, private bankers, not a lot of mergers and acquisitions in Saskatchewan, but again, that's something that's huge. I think the second comment would be that CFA Institute needs to do a better job marketing itself. Chartered Financial Analyst. Yeah, that's what it's called. But if I was hiring a C-suite, someone in the corner office, as a controller, as a CFO, as even a president of a company, I want to see them have that investing or the finance chops. And when I say investing, I don't mean investing in Apple or Facebook. I mean, can you issue convertible debentures? Can you issue fixed income? Do you know the difference between mortgage-backed securities and non-mortgage-backed securities? Your company wants to issue options. All this stuff is CFA training. Unless you specialize in public accounting in specific areas, you won't see a lot of that. So CFAs actually bring a lot of great complements to other backgrounds. If I'm a lawyer, for example, having a CFA will help me if I'm doing estate planning. It'll help me if I'm doing acquisitions and mergers. It'll help me if I'm in-house counsel. It'll help me if I'm a risk management. So there's so many auxiliary careers that one can have as a CFA. And I think we just need to do a better job of communicating the value of the designation in the non-traditional positions, especially when you're working with CPAs that are making the hiring decisions they may not understand.
Right.
We hire our own types. MBAs hire MBAs, CPAs hire CPAs.
And I know as a board here in Saskatchewan, we're definitely trying to promote it a bit more, just from the perspective of not even necessarily selling ourselves, but rather just give a bit of a background of how it can be an added value to these respective roles. So I think just as there becomes more CFA members in Saskatchewan, we're going to see a lot more CFA related roles by all means.
Yeah, and I think as well that CFA Institute recognizes the diversity of roles already, and they are working on campaigns to spread it out, because I think the CFPs, and I mean, I say CFPs, but there's also personal financial planners, registered financial planners. It's just the CFPs, the certified, have the best propaganda and marketing programs out there. So when you think of financial planners, most people think immediately of CFPs, not the other ones.
That's right.
And CPAs are the same. I see a lot of their ads. Oh, if you want investment or advice, come to a CPA. And I'm like, no, I wouldn't go to a CPA, like initially, unless they brought other skills to the table.
Right.
Same as I wouldn't go to a CFA to get my tax returns done.
Right.
So, people need to understand the differentiation.
The specializations. Yeah, exactly. So, kind of on that same topic then, with the different careers available for the CFA, I want to understand a bit more, I guess, the different personalities to find good fits in different finance careers. Ultimately, how do different personalities fit into the different roles that are available for a CFA? I think through your time and energy with your multiple roles, you've kind of seen the variety of personalities.
No, and I think that's another great question. And again, poor marketing or communication flow from CFA Institute. They'll never use this slideshow. But chartered financial analyst, some guy with his HP 12C, a green visor, sitting in a dark back room crunching numbers all day. That's sort of your stereotypical financial analyst. Now, the reality is that CFAs are everywhere. They're doing everything. And so there's jobs for all sorts of person. If you're an extreme introvert who likes to do back office, maybe that pure financial analyst role appeals to you. On the other extreme, client-facing. You can be out selling product. You can be out maybe doing a bit of what Robin and myself do, wealth management. So you're meeting with clients and you're getting out, and you've got to have a bit of an extrovert background. Although I put a caveat on that by saying that wealth management, you do some back room stuff, analysis by yourself. So it's not 100% like a car salesperson who's out there, sell. So there are a ton of jobs or career paths for extroverts, introverts, or in between. The second one that we talked about in our formal presentation was that stability. So some people want a 9-to-5 job where they go home, spend time with the family. That exists. And you can find a job in corporate finance where, okay, month end, quarter ends, you might have some OT, but it's pretty stable with similar work. Or you do mergers and acquisitions where you might sit on your keister for a couple of months and then suddenly you're working 20, 22-hour days for 10 days straight while you're doing due diligence. Not to mention the stress load of, okay, my analysis of this company could be a $100 million, $200 million deal, and I'm giving the buy or don't buy recommendation. So a lot of stress there. Some people thrive in that, others don't. I think that stability, I used to see that in public accounting where it's T0. This is our cutoff date for month end or quarter end. And then on T1, we have to have our bank recs done. And on T2, we have to have our payables and receivables done. And so literally they've got a calendar on their wall that shows every day of the month has this done. Some people love that. It's not my cup of tea, but some people love that. And then the final one was the remuneration, I think. The risk. Maybe risk and remuneration were different. I think, it sounds worse than it is, but I think Robin and your business, and mine too, it's an eat what you hunt. You're out there, you don't have Nutrien giving you a solid salary with maybe an annual bonus. If you're out there producing, you do well. If you're not producing, you don't do well. Again, some people love that. Other people run screaming.
Yeah, and I think it really, as you just mentioned, there's just a little bit of something for everyone. So really, I think it's best to just talk to someone in the industry and really get to know what the what you're looking to do, and really if there's something for you and what that really looks like. Someone in the industry might have a better understanding of what's really out there.
Yeah, and I think that's sort of in part with what we're doing in this podcast series, and we're going to talk to a few of the other board members and CFAs on their journeys, and also try to focus on that area that there are more positions depending on your personality, what you like to do. It's not all green visor financial analyst.
Right. So we kind of touched on this already, but I want to jump into this a little more. You know, the CPA, the CFP, the CFA, all these different little acronyms. What are they? Tell me, you know, are they different? Are they the same? I guess just explain to us a bit of the differences and why one would have all of them, such as yourself.
Sure, and then you can explain why I seem to be getting all the questions. Yeah, I mean, there's generalities. I mean, first of all, you know, each specific situation is much different. So I'm going to talk in broad generalities,
Yes.
because again, a lot of people, because of marketing and propaganda, don't really appreciate the differences. The other challenge is that a few years ago, the CPAs amalgamated the financial accountants, the managerial accountants, and the general accountants. So you've got three different groups of accountants doing three completely different things, and having three different, completely different training, all now called CPAs. So it drives me crazy when I meet a CPA, and then my next few questions have to be, okay, what is your expertise? So that is an issue where you actually have to drill down. Now, if I look at a CPA, especially in my background, financial accounting, they're better in accounting. They're probably better in tax if they spend any time working on personal or corporate tax. But again, there's an area where you have to specialize. I've got general tax knowledge, but I'd have to do the in-depth tax to become an expert or have expertise. So, but that's sort of traditional corporate finance controllership. The CFPs, that's more the financial planning. So that differs from accounting. If I need a balance sheet done or an income statement for my business, that's an accountant. But maybe if I need budget advice, you know, I make $3,000 a month, but I always seem to spend $5,000. The accountant will tell you you're losing $2,000. The accountant might not, as well as a CFP, tell you how to optimize your costs and etc. to break even or to find money to invest. So that's more of the financial planning. Now, your CFA, in broad strokes, won't have the tax background, but they'll be able to tell you where to take that $2,000 that you found to invest and what might be an optimal portfolio to minimize risk and maximize returns. So that's sort of the three different points in broad strokes. But again, even within CFPs, I'm a CFP. I've got certain skill sets, more investment related, whereas I know some CFPs that are insurance brokers. I don't do insurance because that's not my cup of tea. You, on the other hand, you're a CFA, and I believe that you have your insurance license, do you not?
I do, yeah. Yeah. So with the wealth management industry, it's really gone in a direction where you're able to provide advice in really all areas. Maybe you don't do it all, but you do have to have a basic understanding of really everything out there. So I am life insurance licensed, so I can provide advice on life insurance, disability, and critical illness. And we do always look at potentially incorporating life insurance, permanent life insurance into tax planning and estate planning. So it really all ties together, as you alluded to before. But really, you know, if you can have knowledge in all areas, such as having these different designations or whatever route you decide to go down, I think it's beneficial.
And I think that whether you go down the CPA route, whether you go down the CFP or any of the other financial planning or the CFA, once you get there or along the way, you can branch out into a variety of things. No one really teaches insurance solutions in the CFA program.
No.
Yet that's an area that you understood that you need to have to better perform your tasks.
Right.
So again, if I'm doing personal tax returns, then I would go and get my in-depth tax courses.
That's right.
So, what else do you have? You mentioned a couple other courses that you took that are like the insurance where they branch you out. What else can you tell?
So that would be the Canadian Securities course, the Conduct Practice Handbook, and the Wealth Management Essential. So those are all based on the regulators. So basic investment knowledge. Essentially, anyone who's giving advice to a client needs to have these courses. So that's the basic. And they do cover a lot of good information, but very minimal if you really compare it to the CFA designation. Very minimal.
But the difference is you're talking IROC in a lot of cases. And maybe you can explain a bit about IROC. But
sure.
IROC, yeah, they're happy if you've got a CFA, but they want to see you jump through and tick off a bunch of different boxes that may not be CFA specific, right?
Right, yeah, it's a regulation. At the end of the day, they need to ensure that one financial advisor has the same understanding as the next financial advisor. And really the only way they're able to do that is by having these courses completed.
And that's another route you can go if you're a CPA or a CFA, is in compliance, or if you combine it with a legal designation, in-house legal. So the people at Scotia that are dealing with Robin have to have some investment chops themselves to understand what she's doing.
Right.
And having dealt with those people, it doesn't seem at times like they do, because they're very risk adverse. But again, that's another route you can take if you want to get into compliance or legal in a bank.
So I think another question we get asked often as we're in universities and high schools, mostly universities, I guess, is the CFA versus MBA route. And I think you've had a bit more context on that, so I'll let you address that, but I'd like to hear more.
Yeah, that's another question that you hear a lot. You can Google it and you'll get probably 10 different reasons why. My view is that, first of all, I'm biased because I'm a CFA and I'm not an MBA. MBAs will tell you an MBA is better because they're MBAs. That's just the way it works. CPA is the same. So that's the first thing. We hire ourselves. Now, I've had discussions with some finance profs and they disagree with my views a bit, but that's fine. So when I was in commerce back in the day, by my third and fourth year, I was actually writing identical exams to the MBA program. The cover of the exam had both the 300 and 400 series from the undergraduate, plus the 5 and 6 and 700 series. So we're writing the same exams. So to me, in many ways, an MBA is just a accelerated commerce degree without a bunch of electives. So that offends some profs, but too bad. CFA, completely different, and that's sort of what Robin talked about. You can be a finance major and you go into the CFA and it's apples and oranges. So that would be one of the things. In fact, when I considered doing an MBA at one point, some of my profs at University of Alberta told me the best thing to do is actually change universities, because at least that'll give you different profs and different perspectives. So that's a thought if you do want to add an MBA to your undergraduate commerce degree. The big differences would be that cost being one. MBA is still quite an expensive program, although it's come down in cost due to competition. It used to also be a cost of time where you'd physically have to take a sabbatical for 2 years to get it. Now there's a lot of night programs, even remote online learning, and that was pre-COVID. So your time commitment is probably more like a CFA. The downside to that is that, to me, one of the big advantages of the MBA is the networking and the group work. And that's something you don't see in the CFA program. The CFA program, yeah, there's a few study groups, but most people study on their own. MBAs, a lot of networking. So if I went to Harvard or MIT and making some great business contacts going forward. Or if I wanted to live in Saskatchewan and I go to the U of R or U of S, my other MBA students are the movers and shakers going forward. You don't really get that connection with the CFA program. It's more one-on-one studying. But the biggest thing for me with the MBA is the MBA is a much better fit if I'm an engineer, if I'm a doctor, if I'm an entrepreneur. Because the MBA, you can specialize in finance, but the CFA is entirely finance. The MBA, you learn marketing, you learn operational management, you learn accounting skills, and you learn finance. So it's more of a generalist, depending on how specialized you get. A lot of government, public management courses. So if I'm an engineer or a doctor and I'm running my entrepreneurial startup, I've got my skill sets as an engineer or a petroleum engineer, for example. I'm starting an oil company, a geologist. But I don't know how to run a business. CFA really won't give you the tools to run the business. The MBA will, and it's a great complement. Now, once you've got the business up and running, CFA can help you with the financing and all that sort of stuff. But you're not going to learn the marketing skills, the operational management, and that's something the MBA adds value. So if you're a dentist, a doctor, an engineer, whatever, starting your own business, MBA makes more sense to me than a CFA. But if you just want to become a finance person, CFA will give you much deeper skill sets in finance and investing than an MBA will. There you go. Okay, moving to a slightly different subject, complementary skills. We talked a bit about technical skills you can add to enhance your finance career. But there's also a lot of complementary or soft skills out there that are worth pursuing. And I wonder, Robin, you came up with a finance major, you got your wealth management essentials, your insurance, your CFA. But what sort of skills now, looking back, you say, gee, I'm glad I added that skill set? And one of the areas that we talked about in the past, you and I, is a large part of wealth management is actually hand-holding, psychiatrist. Because of the ups and downs, the volatility of markets, it's more soothing, it's that sort of soft stuff. So looking back, what sort of skills did you develop that are complements? Or what sort of skills do you look back and go, when I was in college, I should have taken a course in this, that, or the other thing?
Mm-hmm. Really good question.
I'm amazing.
So, I look at my current day-to-day, and you're absolutely right. Finance is important. Those technical skills are important. It allows me to do a good job in what I have been hired to do. But the soft skills are just as important. Behavioral finance is something you'll learn about in the CFA. That's a huge factor, especially when markets are going down, people are losing money potentially. You need to understand what makes them tick. Hopefully you understand that a bit more prior to something like that happening, but really you do need to be able to interpret how their reaction may or may not be. I think there's a few factors in my business. One is the client side. Another is, in the wealth management business, you're going to have a team that you work with. Your team that you work with, you're going to need to have some HR skill set that you maybe didn't take a lot in university, but you probably have some basic knowledge. And there's always tools in, especially in my role, there's a lot of courses you can still take to learn more. And just being a people person, being able to understand maybe something they're going through personally, be a shoulder that they can cry on if needed, and and really just be there for them. So it's also, I know you and I have had this conversation quite a bit, but being in Saskatchewan, I come from a farming background. So just having that relatableness with the clients, I think helps. So just having a basic understanding of maybe the industries that your clients are in which I think you can elaborate a little more how you've seen that in your endeavors.
Yeah, before we discuss me, I'm just curious, like, can you give an example or maybe define slightly more behavioral finance? Because that is, to me, a hugely underrated part of investing. The systematic risk analysis, the things that actually drive investors to act the way they do, usually irrationally, and by irrationally, just not the way it should be. And so I'm curious, like, you do take some courses in the CFA that cover that, but what sort of behavioral finance were you talking about?
There's probably two that I see a lot of. One factor being just loss aversion. So a client is not gonna enjoy the upside as much as they're gonna hate the downside. So really matching those risk return objectives is probably one of the hardest parts of my job, because everyone wants the highest return and no one wants to lose a penny. But you need to balance that out for what the client really is looking for. And some factors you look at is how old they are, how they acquired their wealth, what they've done in the past, how comfortable they are, what their education level is. So there's several factors for sure to consider with that. Another thing with behavioral finance, I would say, just the overall, I don't know, maybe you can share some thoughts. I think my train of thought.
Yeah, I think that's sort of what I was hitting on is, investors on a risk side tend to be illogical or irrational. And a large part, I think, of any good wealth manager's part is to help the investor understand their biases and their emotional side. And you'll always have some emotional areas, but to try to turn that into more systematic process. So it's a process-driven wealth plan, not COVID hit and the stock market's down, or when Trump was elected in 2016, guys like Paul Krugman and all these famous people the markets are going to crash, the markets are going to crash. The markets didn't crash. Again, even these people that are supposed experts get into their emotional side. And I think that from a wealth manager, it's not our money. It is our money in the sense that we don't want you to lose. We want to help you get ahead. But since it's not our money, we can take a step back and be a little bit more rational and cold and calculating and help you stay the straight and narrow, instead of, I heard what Jim Cramer was saying on CNBC and banging his drum and blowing his air horn and, I better sell everything and, I better buy everything. Well, that's not the way it works. You need a systematic process. And I think that's a huge part of what you do, is that hand-holding and education and that sort of stuff. And that's a ton of value.
Thank you for commenting on that. That was my other train of thought. Exactly. I think that's where the value is added to. It's just keeping you on track of your goals, talking about your long-term goals rather than the short-term bump along the way kind of thing.
And on that kind of note, just to digress for half a second, is my personal view of wealth management is that it's a partnership with the client. Mm-hmm. It's not me or presumably Robin telling the client, this is what you shall do. Here is how to invest. There has to be buy-in. There has to be complete understanding of the process. And that requires some education and a lot of time discussion, which isn't usually chargeable. But by having the client as a full partner, that keeps their ulcer levels down. It helps them understand what you're doing. And then going forward, you can actually implement more sophisticated, for lack of a better word, solutions. And they understand why. So I spent a lot of time explaining the risk return concept, because Robin talked about loss aversion being a huge issue. But there's also, how do you perceive risk? You perceive risk based on how you've experienced loss in the past. And a lot of it is your personality. So I see some people, I lost money last time, I'm due this time. It's payback, I'm going to get mine. So they're happy to have lost because they're due. It's like a bet in Vegas. Other people, I've lost money. I'm never going to invest again. I lost money 10 years ago on gold. I don't care what it's doing today. I'm not going to invest there. So again, that sort of education and helping them understand where Robin and I probably differ somewhat is I'm an advocate of passive investing. And it's hard to explain to people that the investment professionals don't actually outperform the markets. But that's true. And that's my business more. And so again, that's an educational process, is to minimize costs and to get the market returns. If you go to certain other companies, they'll want you to buy their in-house products, whether they're the best or not, because that's their business. So again, it's that sort of helping people understand why you're doing things is an important skill set.
Absolutely. So then back to my question to you, Jordan, about the complementary type skills and what sort of courses, what sort of things should you really look to do in university to really help yourself in your career later on in life?
Oh, I'm glad you asked that. This is my bread and butter. I don't really care about wealth management essentials and 𝐈𝐧𝐿 myself. Whether you be a financial analyst, an investment analyst, whatever, there's essentially two ways to analyze an investment. There's quantitative analysis, that's financial ratios and looking at financial statements and reading the notes to financial statements, all that good stuff. But then there's the qualitative side. Anyone can crunch numbers. It's how you analyze the results. So if you want a career in finance, industry knowledge is paramount. Now, I meet business students all the time, and I usually ask them what their career plans are. Do you want to stay in Saskatchewan to work? And for those that say yes, the next question I ask is, so how did you do on your geology course? And they're like, giving me the look Robin's giving me right now, saying, I'm a finance major. I don't take geology. Well, you should, for a variety of reasons, if you want to live in Saskatchewan. So you're coming out as an accountant, you're coming out as a banker, you're coming out whatever in business. There's a good chance that you're going to work for a natural resources company, an oil company, a mining company, a potash company, or a complementary like a transport company, a drilling service company. Maybe you go to work as an accountant with Ernst & Young. Your clients in Saskatchewan are going to be natural resources. Maybe you go to work for Westcap, PFM, TD. You're going to be studying a lot of natural resource companies. Maybe you work at Robin's job. And I don't know what Robin's answer to this will be, so it'll be interesting to see. But I would speculate that a significant portion of her clients, her individual clients, work directly or indirectly in the oil and gas industry or a complement. And she's waving her head no, but...
Yeah, not overly. Our business is quite a variety. Like, if you really think Saskatchewan does have a variety of different businesses, of course, farming and oil and gas are definitely, for potash and like nutrient chemical. Yes, those are definitely some large companies in Saskatchewan, but we would have construction companies, definitely your agriculture, even professionals, right? Like, we're dealing with doctors and lawyers, and just a variety of.
Now, how do you find, we'll leave out the COVID discussion, but I'm in the construction industry. Mm-hmm. So let's use Calgary as an example. Yeah. A few years ago, you drove down to Calgary to meet someone for lunch downtown. Mm-hmm. Never find a parking space. Mm-hmm. Rent was fully occupied. Mm-hmm. you're paying a huge premium for office space. Restaurants were booming. You had to have a reservation.
Right.
Oil patch goes in the toilet. I can drive downtown at 11:30, get prime parking, get into any restaurant. They're begging me for office space. So that was more what I meant was you're going to have people that actually work for Potash Corporation. And Potash Corporation here, Nutrien now, is another prime example. When the potash prices were great, everyone prospered.
Right.
At Riverside Golf Course, we're charging nice premiums on our memberships. Probably the Saskatoon Club where we are now is chock full of people. We're buying lake properties. We're doing this and that because everything trickles down. So if I'm a construction, building houses, a buddy of mine is a home builder. It's not as good now as when potash prices were up or oil and gas prices.
Right.
So it's kind of that, just the understanding, even if they're not directly in the patch, everything trickles down. So having understanding about the natural resources can at least help you in conversations with your clients.
Oh, absolutely.
So there we salvaged a bit of that. So industry knowledge, I think, is important for a variety of reasons. And I can't really emphasize that enough. From an investing side, when I used to live in Calgary, you get your stockbroker calling you and, ABC company, they're going to hit a well and it's going to do, let's say, 1,000 barrels a day and blah, blah, blah. You should invest. Well, okay, maybe that sounds good. But is that light sweet crude or heavy stuff that needs to be processed? That affects your netbacks. Is it near a pipeline? Or do we have to ship the stuff out by truck for 100 miles? Again, if you're analyzing a company as an investor or as a financial analyst, you need to understand the industry that it's in to determine what the true cash flow is. And in the oil patch, if you know the business at all, something that comes on at 1,000 barrels a day, that's not going to stay at 1,000 barrels a day. There's going to be a quick tail off. So what's the payback periods? What's the other wells in the area producing? These are things that if you just look at the numbers, you don't get the full picture. One quick short story, which is quite funny, is a public company I know. They were in precious metals, and they have great assay report. Perfect. It's not one of these scams. It was a real company. And the company next to them on the plot of land was a huge producer. And they were producing this product, great netbacks. So when this junior company found this play, great. But I was auditing the company at the time, and what I found hilarious was the big producer that was next door was on a nice flat piece of land at the base of a mountain. And they're producing, say it was $300 an ounce for whatever the product was, and it cost them $50 to produce. The company I was auditing was actually on the side of the mountain. So, it wouldn't have been feasible at like $600 an ounce.
Right.
So again, you have to understand, you can't just say, well, next door, they're producing, and we've got the same assay results.
It's not the same.
No, and that's sort of understanding business if you want to work for a Westcap or a PFM Capital.
Absolutely.
And that's something that the people at Westcap have talked to me about, is their concern at times where CFAs don't have that industry experience. They can crunch numbers. They don't really understand the qualitative side. So
how do you recommend getting that experience, Jordan? Through random courses, through your university endeavors, volunteering, side employment opportunities prior to maybe being done in university?
Yeah, I think in university, look at, the geology courses, or if you're going to work in Silicon Valley, IT, or, those sort of things. Where are you going to live? Agriculture is big here. So develop skill sets there if that's what you want to specialize in. And then again, for your summer jobs, maybe less focus on painting houses or cleaning golf clubs, and sacrifice a little money to get an internship with a Nutrien or with a Cameco or one of these things. So again, you can find skills, but I think the problem with college kids is often they're not aware that they need these skills, so they don't develop it when they are in school. So that would be sort of the area that I would say, to me, is number one, industry knowledge and developing those skills. And again, as a plug for the CPAs, I audited a lot of oil and gas and mining companies. And then when I moved to the industry, I had some knowledge. So again, that's another plug for going financial accounting before. To follow up on your social skills, I think those are huge. And the one little story I'll say, just to add to what you were saying, is I was about, what was I, about 22, 23, 24, first controllership position, young, single, could hardly manage a girlfriend, and I'm out. And then I get into the job, and I've got like a 60-year-old grandmother whose husband just leaves her. And I've got another woman who suffers from domestic violence. You don't develop those tools at Price Waterhouse or in commerce at the time in how to deal with people that are double or triple your age who are going through these sort of issues. So in smaller companies or in teams like you were discussing, you have to develop those HR type issues and how to deal with conflict resolution. And so again, those are things to look at developing externally, because you're not going to really learn that in the CFA program or the CPA program.
Yeah, you definitely need to be proactive.
Yeah. Another thing is sort of understanding the difference between leadership and management. There's a big difference. Managers manage, leaders lead. It's hard to explain the difference until you walk in those shoes. But you need both those skills. You need to make sure the trains run on time, and you've got to get people to follow you up that hill when you're charging a machine gun nest, to use a World War II analogy. I dated a girl, a lady, let's call her. Her father was president of one of the largest private companies in Calgary. And I remember one day saying to him, I said, Ron, you must have it pretty good. You make a lot of money, you're the head of this big company. And he said, Jordan, yes, in some ways it's good, but you have to be, as the president, the squeakiest clean employee in the entire company, because everyone looks to you for their cues. If I take a 2-hour lunch or I come in at 9 in the morning, people see that and say, oh, if he can do it, why can't I? So I remember Ron had a preferential parking space near the front door of their business, but if he was in the city, his was the first car in the lot in the morning and usually the last car out at night. That's leadership. That's setting example for his staff and his team, and that taught me a lot. So again, it's leadership. If I look at my time at UBS, again, leadership. I was in an executive program where they identified, let's say, younger executives who were on the path up, and they get us together. Part of it was networking, meeting people from other organizations within the bank. But one of the things we did was a lot of soft skills. And the one example I'll raise was we actually managed a staff meeting, about 8 people at a table, and we ran a meeting, and they videotaped it. And what was amazing when we reviewed it afterwards with the experts is the amount of nonverbal communication that exists in any dynamic. And there's probably nonverbal going on right now between you and I. But when you see it on tape, you realize, okay, I should be doing this differently because I'm sending mixed signals. If someone's got a stupid idea, maybe I'm rolling my eyes. Just the way I turn my body will tell people certain things. So you spend a lot of time on that because that's important, I think, in a business. And as I keep talking, because I've thought about this a bit, is that presentation and communication skills are also extremely important. And I think that's a skill that we're losing with a lot of the texting and the short, sweet communications and emails. But everything that I do reflects on me or my company. So whether that's presenting a report or advice to a client, whether it's communicating with my superiors. And I find it's inverse. When you start out and you're young, like we were both once, it's the technical skills. But as you go up the ladder, it's all about, can I present?
Yes.
Can I communicate effectively and clearly to clients? And that's one of the things that I would be, in many people's eyes, a poor boss, because I'm a perfectionist in the sense that if something goes out the door from my unit, it's got to be right because it reflects poorly on me otherwise. And a lot of people, let's just, can't we get along to get along? And so poor grammar, poor punctuation. It says if you can't get the little things right, are you going to get the big things right?
Mm-hmm.
And
I think that's when it comes down to hiring the right people, because micromanaging doesn't allow you to get anywhere, but I do think having the right people will allow you to thrive.
Now on that, because again, we've talked about this before, maybe you can expand a bit on that, on teams, and we're going to get into this especially with women in finance when we tackle that in a later date, but team dynamics and understanding team dynamics is so important.
So important.
And, maybe share some of the things you've told me, because, the perfect world of hiring, where I go hire the best person, isn't the way it works. And it's not the way it should work.
Right. Yeah. I think when you're hiring someone, there's a few factors we're looking for, and by no means I'm no expert at this, but I'll just share my experiences. And first of all, we want to hire the right skill set. That is, the right job, the right fit is going to come down to the right skill set. That's one factor. Personality is also another factor. So do they fit with the team, that sort of thing. And whatever gender they are, whatever race they are, whatever it is, it's the right fit we're looking for. We're not looking just to fill a spot based on what we're required to hire for. So we're always looking for the right person.
Yeah, and I think there's a difference often, always, between the right person or the right fit and the best person.
Mm-hmm.
They're not always the same.
Yeah.
One of the areas, I've been in many cases where I intentionally don't pick the best person because I know that in 6 months, so they can come in on day one and do the job. I know in 6 months they're going to be looking elsewhere. Whereas I can bring somebody in that maybe it's a couple of rungs up the ladder beyond their current skills, but I know then that they're going to be growing and learning and developing, and I'll have them for a 3 or 4 year period before they max out on their skills.
Mm-hmm.
And I want to hire somebody that has potential for continued growth. So that may not be this person is the best.
Yeah.
It's the person that's the best fit with my team. It's the person that's got the best upward potential. And in my case, it tends to be the best person that complements my skill sets and personality.
Right. You don't want 5 of the same people that are strong in the same suit. You want to have different strong suits.
Exactly. And you can't have 5 alphas.
Exactly.
As well. You need people that know their role. It's like you can't have 11 Peyton Mannings quarterback your football team at the same time.
Right.
You need wide receivers. You need offensive linemen. They all bring different skills to the table. So tell me, like when you were in university, how many of your courses actually got into that in any detail?
0.
And your CFA program?
0.
What about your Canadian securities course?
0.
So that's probably the most important skill set that you have to develop in leading a team or managing a team.
Right.
And you have to stumble through it on your own.
Yeah.
So there are courses you can take. There's books you can read that sort of help with team dynamics. And that's something I'd say.
Yeah, I think reading books is definitely a huge professional development tool that everyone out there should do. You know, if it's one a month or something, we're all busy people, but you need to make time because those are the skill sets you don't learn in courses.
Yeah.
And it definitely helps you long term.
And I think that's kind of the advantage of what we're doing here today is when I was at the age of college, I didn't realize what the keys to being a leader or a high-end manager were. I thought, oh, I'll be the best accountant or I'll be the best finance person. No, it's the soft skills. And when you talk as well about the courses and things, communications, I said, was huge as well, and presentation skills. So I would love to see someone that has English or creative writing courses while in college, so that they can communicate clearly. I would like to see, again, I mentioned conflict resolution, someone that has some skills there. You know, book smarts versus real smarts, a bit different, but having a bit of understanding. I want to see someone that has maybe debate clubs, Dale Carnegie, Toastmasters, which help them present, communicate. The fellow I was talking about earlier, Ron, he was a huge advocate of Dale Carnegie, and he was probably one of the best business people I've ever met as far as treating people the way they deserve to be treated. You know, you treat everyone the way you want to be treated, kind of, and that's sort of something you learn in Dale Carnegie. You can't treat the secretary one way. In fact, I was quite high up at UBS, and I'd hire a lot of executives. And one of my tricks was always I'd have my secretary go down to the front door to let them in because it's a locked situation anyway. But then I'd make sure that she spent 10 or 15 minutes before I met with them, getting them a coffee, talking to them. And you can tell so much about somebody by how he or she treats the perceived lower end staff. And I met a lot of people that treated me one way and kissed up to me in the interview.
Yeah, that sure tells you a lot about a person quite quickly.
And so again,
Great
those are skills, and it's amazing that you're an executive and you haven't figured out how to treat people. I don't want you working in my organization.
Well, exactly, yeah.
So the other area we can talk a bit about is forget Canadian securities course, forget wealth management, all those fun things. To me, I think the biggest skill that I would be hiring if I was in your position is someone, well, I mean, there's a variety of things, but analytical skills, initiative, enthusiasm, all that go with it. But in any job in finance or accounting or these things, people want staff that bring solutions, and that requires analytical skills. What are your thoughts on that?
For sure. We promote independence, and we want everyone to work as a team, but we also want everyone to contribute as a team member. So for sure, we need to have that open environment where everyone feels comfortable sharing ideas, but we also want to promote efficiency, productivity, how we can improve the client experience, how we can improve the team environment. So definitely all of that is something really just important to make sure that everyone feels comfortable. So.
And those are skills, again, that aren't specific to finance, but you can develop in a variety of ways. 15 or 20 years ago, the Goldman Sachs of the world, they'd recruit from the chess clubs at universities because the chess students had that analytical and problem-solving skills. I would argue today that you can make that case for a variety of things. Martial arts, which is my background. If I'm rolling with you on the floor in Brazilian Jiu-Jitsu, we both have similar skills. And so again, it's analytical, how to think ahead, how to think yourself out of traps. And if you've got those skills, you succeed. If you don't, they're waking you up from being unconscious on the floor. So again, those are sort of skills that people want to see. Is I want to see someone that can solve problems for me and reduce my workload analytics and the similar aspects are important when I hire. So
That's right.
again, those are complementary skills. The other thing I would say, which is I don't know how you handle this, but I'm a big Socratic boss, Socratic teacher, as you probably know from working on the board with me. I don't want to give people the answers. I want my staff to understand what's going on. So I ask a lot of questions. Now, some employees thrive in that, others don't. But don't just put your hand out and expect someone to give you the answer. You know, if you come and work in a lot of companies now, having that ability for creative thought to analyze, problem solve. Again, more analytics, but that's what we look for, is people that can bring the resolutions and think through things sequentially and logically to come up with answers, not just give me the answer and I'll go away and I'll do the work. So
Right. What about foreign languages? That's something I know you've come across as an important skill set.
I love foreign languages. And I think there's a variety of reasons why they're important. The one question you get in Saskatchewan is, okay, I'm going to live and work the rest of my life in Saskatchewan. Why do I need to learn anything else? Well, you don't. I mean, that's probably pretty clear. But I think a foreign language is good in the fact that it helps you get a job. What do I look for in people that I'm hiring? And again, we're going to focus on hiring in a separate section. But I want to see people that can learn new skills successfully. I want to see that they can persevere. I want to see they take on challenges. Learning a language isn't always the easiest thing to do, even to get conversant. So that's just one more thing in your resume that shows that you can learn and you've got skill sets that we desire. And I think, you know, just to sort of throw it back to you for a moment, Robin, whether it be a language specific, you're looking for people that can actually successfully learn and persevere and these sort of things in your positions.
Absolutely. I think you're not necessarily looking for the specific accomplishment. You're just looking for that drive. And I sometimes even hear that with the CFA. You know, lots of times people look at the resume and they don't necessarily understand the CFA or need the CFA as part of the job requirement, but it just really tells you a lot about someone if they've been able to go through a program such as the CFA program that's so intense.
Yeah, and so that's sort of one aspect for the languages. The second aspect is the world is shrinking. So even if you're in Saskatchewan, you may be with a company that does business overseas. South America is a huge growth market for Canadian companies, mainly because of the time zones, because of the fact that a lot of South American countries were, I wouldn't call them third world, but they were behind the times, and now they're moving into the 20th or 21st century. And so there's lots of opportunities. A buddy of mine's a CFO for an oil company in Calgary, and the only place they drill is in Colombia. So again, they don't do any work in Western Canada. It's all South America.
Right.
So that's sort of one thing that's good. I found that knowing a second or third language helps my English. You really focus on, speaking properly. I did a risk management course a couple of years ago, and the producer said, "Oh, transcript's great. You're doing a great job, but is it possible you could speak like you actually speak? I can't do this, or I wouldn't do this." And I realized that from living overseas, I don't speak in contractions anymore. I try to speak clearly and without cutting things off, because that helps people understand what I'm saying. So my communication skills are probably better, and my understanding of English language is better. I think when I went to Switzerland, I think my first week there, I asked someone, "Hey, let's go out after work and grab a bite." "Was ist das bite? Why do I want to grab a bite?" And you realize, okay, you can't speak like you normally would to someone in Saskatchewan or Alberta. Finally, I think languages are fun. I like to travel. I spend a lot of time in Spain and now South America, so I like speaking Spanish. It helps you understand the people, the culture. So again, if you just like to travel, it's always nice to fit in. And that's probably the keys for the languages. They'll help you get a job. They give you that track record of successful learning. They may help you stand out from the pack if you're working for a company that works overseas, or if you work for a public accounting firm or Scotiabank, for example. They have operations all over the world. You could transfer. Scotia probably, I think Scotia's everywhere as well. So all the big banks. Okay, I think that, is there any other comments you'd like to say today?
No, I think I hope everyone got a little bit out of today's session, and be sure to reach out to us. Our information's on the website, the CFA Society of Saskatchewan website. Feel free to contact us if you want to learn more or have any other follow-up questions, and be posted. There's going to be more to come of these podcasts.
Yeah, and I think we're going to try to have a few more podcasts with other board members and other CFAs so we get different perspectives on their journeys. Robin and I are going to have 2 more segments, one on what we look for when we hire and the true value of the CFA, which sort of goes part and parcel. That's a follow-up from what we did in our formal presentation. And we're also going to have a section on women in finance and diversity issues, because that's an area that's being promoted by the CFA Institute and industry. And we both have some interesting thoughts on why there are not more women entering finance as a career versus, say, accounting or law or things that sort of have similar backgrounds and training. So watch the space, and there should be a couple more segments posted by the time you get to this. Thanks again for your time, and thank you very much, Robin.
Thank you, Jordan. Stay tuned.